Hey team, okay, so I've been getting a lot of questions on what I've been recently doing due to the high volatility in the market of selling premium. So selling premium is a concept of where you're collecting credit for selling an option and letting that option basically either expire or reduce in price by time and or movement of the stock. So let me explain. Basically, what I did today with Nvidia. We got Nvidia here. So Nvidia is trading at 245. Okay, it had great earnings. I mean, it was just incredible, and it's down 20 points. So again, it's not the news; it's the reaction to the news. That's why I don't like being involved in the stock on earnings. I get out before and I get back in afterwards if if it's set up. So right now we have nothing trending. The market is choppy. It's all over the place. I mean, if you look at the Nasdaq, we are back down to the lower trend line here, right here. So we can kind of break and go down lower, or we can kind of just stay in this. But basically, we've been just chopping around. Nothing's going on. So there's no trend. There's no trending here. There's nothing where you can get a sustained trend. It's just chopping around. So we sell premium to collect credit because the VIX is the volatility index. When the VIX is high, that means premiums for options get inflated. So that means when you're a buyer of an option, you tend to lose money more often than not when you buy options because you're buying at a high price, and then you have a decaying asset because as time passes, options diminish in price. They have an expiration date. So that's why people say options are risky if people lose money. Well, because they don't know what they're doing. They're buyers of options. I am rarely a buyer of option. And if I do, it's just kind of for a quick 1 or 2 day thing, not to hold it for any time period. I'm a seller of options. I collect premium. I'm the house. So I collect money from people that are buying, and then as time passes, that option, it's decaying in price. So again, back to my lesson here on Nvidia. So Nvidia, 20 bucks, okay, 245. So I'm looking at technically like around this level here, which is the support of the 200, which is it supported it, here before, and somewhere here by the 225 range. I'm looking at, that's what I'm kind of looking at as far as the support level, and then at 210 range, which is the other one I sold. So basically what I'm doing is I am selling a put. What that means is I am selling somebody, I'm selling the market the option for them to buy, for them to sell me Nvidia right here at 210 if Nvidia goes down to 210. If it stays up here, this option right here, it's worthless, right? Because why would you want to sell it to me at 210 when the market is at 245? So the trade is that Nvidia needs to stay. I don't care if it goes to the roof or if it goes down to like 212. As long as it doesn't go below 210, I'm fine. So a price of a stock could go, this is basically, time. So a stock can go like straight up. It can go kind of, angling up. It could stay flat. It can kind of go down a little bit, or it can go parabolically down. When you sell premium, you make money 4 out of 5 options, possibilities. Why? Because, let me clean this up. Because I'm right here. I'm right here. I have one here and one here. If Nvidia goes up, this is worthless. I make money. If Nvidia goes sideways, this is worthless. I make money. If Nvidia goes down, but it stays above 225 and 210 before, the March 4th date, I make money. This is worthless. If it goes way down, then I'm in trouble, and then I start managing this. I start rolling it. Rolling it means I'm buying it back, and I'm selling, the further out time. So I have the March 4th. I'll sell on March 11th or the next week out to collect more premium and buy myself some more time for eventually to NVIDIA fix itself and go higher or somehow manage it. I'll take it, day by day on that. Here's how that works. So I'm here on NVIDIA. This is my filled orders today. So here, I sold 2 NVIDIA March 4th 210 for $275. What that means is, let me go to NVIDIA. March 4th. So I have -2. So I sold 2 of the 210 at $275. Right now it's at $230. So I'm up $45. I own 2. That's $90. So if I buy it back right now, and remember, the bid is the selling, and the ask is the buying. So if I want to buy it back right now, the 225, the 210, I'm buying it back for $235. I sold it for $275. I make $80 if I want to close it right now. That's how that works. So I'm selling. So I'm clicking here, and I'm a seller of 2 NVIDIA March 4th of this year for the 210 put, and I'm collecting a credit of $232. So let's say you want to do it for $235. So you're collecting $469. Okay, this is going to require, for me, about $2,200 of margin. I have portfolio margin, which is a little bit more high grade. They give me a lot more leverage. So for a regular margin account, this might be, I don't know, 4,000, 5,000, I don't know. But basically, that doesn't matter as long as you have enough buying power. So I'm collecting $469. If I sold it at $235 right now, I'm collecting $469. So $469 is going to go into my account. My account will increase by $469 right now. The second I hit send and it gets confirmed and I get executed, I will receive this money. So now I have, in my scenario, I have 2 NVIDIA. Where is it? 2 NVIDIA at $275. So it's right now trading at $234. I'm up $81. So it's like a 15% gain. Okay, P&L percentage. So that's what that means. I sold it. I got credit. I'm selling it short. That means I am long NVIDIA. That means I want NVIDIA to go up. If NVIDIA goes up away from 210, this becomes even lower and lower and lower. That means I could buy it back even, cheaper and cheaper and cheaper, and then I make more money. How that works when you sell premium. I hope that makes sense. Now, Tesla, I actually just here update. I just sold another Strangle for the same 1,750 Feb 25 for $391. So a Strangle. This is what a Strangle is. Let me Strangle. Tesla. A Strangle is the same concept. I'm selling premium, but I'm selling it on both sides. So I'm selling down here and I'm selling up here. So I'm selling a call and I'm selling a put. So I'm collecting premium from selling the put premium, like NVIDIA, and I'm collecting a premium for selling the 1,000 put. The 1,000 call, like I did with Facebook. Facebook, I sold premium on the call side and the put side. That's a Strangle. I'm strangling. So as long as Tesla stays within 1,000 and 750, I make money. So I'm seeing this resistance here at 950. So as long as it doesn't go above 1,000, I'm good. And as long as it doesn't break below 750, I'm good. That's what that means. Now, when I sell, if you don't have the margin, make it into an Iron Condor. An Iron Condor is when you sell the premium of, let's say, 1,000 and 750, and you also buy the 1050 and the 700. So now you're covered. So your only risk now is between here and here, because if it goes through here, this one is going to go up in price. If it goes all the way through, well, your only loss is this range. If it goes all the way down, your only loss is this range. Make sense? But again, if it stays here and here, these become worthless, this become worthless, or they go down in price, so you could buy it back at a cheaper price than when you received, and then that's the difference, and that's your profit. Okay, that's and then the same thing with a put. You can make it a vertical. So let's say you don't have the margin to sell the 210. Well, sell the 210 and maybe buy the 200. So now you're limited to this only being your risk. So you're covered. So your margin requirement is a lot less. Obviously, you get less credit, but now you can make the trade, and it's the same concept. As long as NVIDIA doesn't go below 200 or 210 and it stays in this area here, you're fine and you make money. That's how that works. And then on the actual trade itself, what you would do is on let's say Tesla, right here on where it says spreads, you could make it an Iron Condor. Where is it? Iron Condor, right here. Okay. See, they give you, and then you could, let's say I wanted to do the same thing. I wanted to sell the 1,000 on 750. So let me go here. I just pick any one. I'm selling. So March 4th, I'm selling the 1,000, and I'm buying this the 1050. Okay, and then down here, I'm selling the 750. That's what I did. And then to make an Iron Condor, I'm buying the 700. So now instead of my 1210 that I got, I received 1210. Remember? Now instead of my 1210, you're gonna get 725. So you're gonna get less credit, but your margin requirement, I did it as one. I did it as one. So I only did one, not two. So you're gonna pick up 734, and then your margin requirement is only $3,400. Okay? So as opposed to if you make it into just a regular strangle, and you're selling the 1,000 and you're selling the 750. Okay, I picked up 1210, so I'm down like $60 right now because it's the VIX. This is the VIX right here, the VIX. This is the volatility index. Anytime it's over 25, I like to sell premium. Anything between 20 and 25, I'll be more conservative, but definitely over 25, I want to sell premium because the market it's juicy. Well, we're down 288 points on the Nasdaq. The futures are down 310 points. So when I say the at decline line, this is what I'm looking at. This really this right here should always be in the 2000s if it's a really strong market. Anything over 1,000 is still good. So like this is strongly going down. Is what this means. Like the other day when it was only like about 400 and we were up like 250, that's when I said, this doesn't make any sense. We're going to go down from here. And then we kind of did. So that's what that means. So when the VIX is over 25, I like to sell premium. The VIX is less than 20, I am not selling premium. I don't have an edge. The juice is not there. There's no juice in these options. It's not there. So what I do is I go long. That's when I start buying shares, because we normally have more of a sustainable trending market, somewhere between 15 and 16 and 17, 18 delta. 18 VIX. That's a good market. 12, 14, 15, great market. Anything over 25, we have volatility, we have chop, and then premium is high. That's basically it. So here's back to what I was saying. I received 1210, and the other one you received 735 on about 3 or 4 grand of margin. In my scenario, 27 grand of margin. So you see the difference? Again, sorry. This is one. So 400, 13,000. So it's about a 10 grand difference in margin requirement for about $500 difference in what you get. So the reason why I like to do it naked is because I know how to manage this. I'm pretty confident that I know how to manage this. I don't really care about this going crazy. If I have, again, portfolio margin, I have a lot of leverage, so I'm fine with that. I don't like to do iron, and then I could roll these a little easier. When you have verticals and when you have Iron Condors, it's a little bit harder to roll and to manage. These are a lot more easier to manage. They seem riskier, but realistically they're not, because you can manage these a lot easier than you can verticals and Iron Condors and so forth. So yes, you get the pro and the con. You have a huge reduction in margin requirement, but you got to be quote unquote more right. When you have a naked, as long as you could be quick with it and roll faster, you'll be okay. So rolling, what does that mean? Okay, let's do the NVIDIA one. Let's say NVIDIA, I have this 8 days away. Again, every day that passes on an option, you have what's called theta decay. Options have what they're called Greeks: theta, delta, gamma, and vega. Look it up. It's just too deep to get into it right now. But basically, theta is the time value of the option. So anytime inside 30 days, the options kind of have an exponential effect of decreasing in value. So that's why sometimes when I really want to hold something long term, I might go a little bit longer and then kind of roll and kind of make it a permanent position. If I want a quick trade, I want to do like an 8-day or a 15-day or a 20-day. So basically, I'm saying that between now and February 25th, NVIDIA is going to stay above 225. I don't care if it does or not. The second this becomes like maybe like $1.50 or $1.25, I'm buying it back, making about 45-50%. I'm moving on. So that's what I would do. But basically, every day that passes, this premium right here loses value. If NVIDIA goes up, let's say 5 points tomorrow, and that's one more day, this 277 might easily go to like 205, 195. If NVIDIA goes up 10 points, this is going to go to 175 easily, because you have time decay and you have the stock going your way. So that's kind of how it works. Again, now if NVIDIA goes down tomorrow another 20 points, yeah, this is going to be down. I mean, if this goes down another 20 points, this might go down to this might go up to like 5 or 6. So yeah, I'm going to be down a lot. But what I would do is, in this scenario, I will roll. This is how you manage the trade. That's the initial entry level of managing a put that's gone against you. You roll. Rolling means I am going to create a rolling order. Okay, so I currently have where is it? I currently have the 225 February 25th. So I'm gonna buy it back. I'm short 2 because I sold it. I got 255 credit. So now I'm gonna buy it back. Here's buying it back, and then I'm gonna the same transaction. I'm gonna sell the next week, same 225. I'm gonna pick up an additional 227. So that's another $400, $450 in my pocket by just extending it in time, giving myself time for NVIDIA to either stay flat for a little bit and then have time decay, eat away at this price, or go up in price a little bit and I could buy it back at a break even or a small gain. That's how you manage it if it goes against me. Now, another thing I could do is, if it's really going against me, let's say it's at 220 right now and I'm on the water 5 points. So instead of rolling to the 225, I might roll to the 220. Okay? So that means I just picked up 5 points of risk reduction. I just reduced my risk by 5 points, right? And I'm still picking up $100. In this case, $200, $230. So I'm reducing risk by 5 points, and I'm still picking up money. This is the beauty of selling premium. Again, only the reason I'm doing it is because the VIX is above 25. Okay? There's a lot of tools in my toolbox, so this is what we're doing right now because of the market we have. When we have a trending market, I guarantee you this VIX is going to be at 17, 18, 16, and we're going to be making a lot of money buying shares. Buying NVIDIA at 240 and watching it go to 260 in a week. Okay? Right now, that's not what we have, so I sell premium. So that's what that means. This is how you roll. Okay? I hope that makes sense. Now, on the top side, this is what I have on Facebook. Okay? On Facebook, I have the puts, and I also have the calls. I have the March 11, 235 call, 22 days away for 201. That means that as long as Facebook doesn't go As long as Facebook doesn't go above 235 here, I'm fine. It's at 218. So remember this little circle I did here last time? That was my kind of my profit zone. Okay, that never got hit. That never got, I mean, up here was kind of my target. Remember, I had this as my time and this as my 250 something. I kept lowering and lowering. Now I have the 235. So as long as Facebook doesn't go up to 237, 238 by March 11th, around here somewhere, I'm fine. And I have the 185. I'm sorry, the 200 that I sold here. So that's what I have on Facebook, right? Oh, and I also have the 185. I sold the 185 for 102. I'm a little down. I'm $100 down on the transaction. It's no big deal. The market's been choppy, but again, I'm selling premium. So tomorrow, if we have just a flat day or nothing happens, this will go up in price because of time decay. Okay, so when you sell premium, it's a time dependent trade, not just a stock movement trade. I hope that makes sense. So when you sell premium, you are selling time as well as the movement of the stock. You want it to go in your favor. That's like awesome. But it doesn't have to go in your favor right away, or as long as it doesn't go against you a lot. Just by time passing, you make money. I hope that makes sense, guys. So any other questions or anything more specifically on selling premium, please let me know. All right.